Well, part of this is just because of the action that we have seen this year thus far, where the contribution of the Magnificent Seven, including Nvidia, has really fallen relative to the rest of the market. That's in part because of underperformance of those names and in part because of the broadening of the types of stocks that are doing better. This long-awaited broadening that a lot of investors have been calling for a while. So Yahoo Finance crunched the numbers. This is as of Wednesday's close, so we might have seen some tweaking since then. In terms of the biggest contributors to the rally this year in terms of the market cap gains. Now, last year, it was Nvidia unquestionably, and all of the others were members of the Magnificent Seven: Apple, Amazon, Meta, Alphabet. In terms of their size and the magnitude of the gains, they contributed the most to the S&P 500's gains. In fact, for the Magnificent Seven all together collectively contributed more than 50% of the gains for the S&P 500 last year. This year, it's a very different story. Yes, Meta's still number one at around 13%. Nvidia's at number two. We'll get to its percentage in a moment. But then you got Walmart at number three. You got JP Morgan Chase at number four. Eli Lilly is on the top 10 as well. So it is a more diverse, beyond big tech list of stocks that's doing well. For Nvidia specifically, last year it accounted for 20%, just Nvidia alone, of the gains in the S&P 500. This year, it's a little more than 5%. So it's not that Nvidia is not important. It's just on a relative basis, it's less important. Just another way to slice and dice this, to look at the broadening trend that we have seen, is to look at the S&P 500 year to date, which is market cap weighted. That is, companies like Nvidia and Apple have a bigger weighting, a bigger influence. And then if you equal weight it and look at the year to date, it's pretty much neck and neck. There was a big gap between these two last year. So just again, gives you an idea of the closing of that gap that we've seen. So that's part of it. And then part of it is also just that Nvidia is not wowing us quite to the same extent than it was when it first began wowing us as it was first catching fire with the demand for generative AI chips, right? So if you look at the company's revenue trajectory, really started taking off in 2023 and its reports then, and we were seeing triple-digit gains. The revenue gains, by the way, peaking right around 260% here. And that was, if you look at the quarter when that happened, that would have been its fourth quarter of 2024, fiscal fourth quarter of 2024. It's on a bit of a different calendar. Now, the estimate when it's coming out with its numbers next week is for revenue of $38.26 billion. That's still a 73% gain. It's all relative, right? It's still a 73% gain, which is a big gain. It's just not sort of the heady, huge triple-digit gains that we had seen from Nvidia in the past. And, you know, we did see Nvidia fall a couple of quarters ago when it reported. Last quarter, the stock was a little changed. So we'll see what kind of halo and ripple effect it has this time around. Again, it's not that Nvidia isn't important. It's just that it has become less important as we get this broadening. And then finally, just want to take a look at the stock action in Nvidia, if we could get it to come up. The stock action in Nvidia that we have seen year to date here. So here's Nvidia. The stock is up about 3.3% year to date here. Here's today's action. You know, so it is higher year to date, but its record high was back on January 6th, and it has not reattained it since that date. So again, just something to put things in perspective as we await those earnings after the close next Wednesday, Brad.
As the excitement builds for Nvidia's upcoming earnings announcement, all eyes are on the details of the next-generation Blackwell GPU, with key figures at Nvidia preparing for significant revelations. Investors and tech enthusiasts alike have braced for the stock to surge after Nvidia's impressive 22% surge in February, which has not only surpassed important moving averages, but also propelled the tech giant's shares to pre-plan levels. Above and beyond, welcome back to the investing tutorial. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Well, NVIDIA looks at all this and says, yeah, keep coming with your new models, because we need to just sell even more chips.
Exactly. If I'm going to thread a theme, you had Steve that say basically they all do the same thing. You had Kate mention commoditization, but the commonality between all of this is the foundation is Nvidia, and that means that Nvidia is going to continue to do well when it comes to demand. Well, we know from the Grok 3 that it was trained on 200,000 H100s. That's double the original 100,000 they talked about last year, which shows, hey, we need even more chips to compete at the top level, which would further drive CapEx for a lot of other companies. The second major point, too, is that all of Grok 3 was trained on Hopper chips, which is, I guess, the current iteration, the one that people can actually get their hands on. It's not trained on Blackwell, which could further drive upgrades in the near future. And we're going to hear about that next week with NVIDIA's earnings. And then the third point is just this was all built in 92 days, right? So Elon Musk said it was the largest liquid cooling cluster of GPUs out there. If they're able to do that, get their hands on all the chips in 92 days, that bodes well for NVIDIA demand to remain consistent and not have these air pockets or moments of transition between quarters that some people are worried about.
Yeah, we'll see what they deliver. But a week from today, expectations, I guess, are going to be high again, right? Because the stock has been ramping into the print yet again.
Yeah, it's actually above, well, it was above that 140 level when you had DeepSeek, I'm calling it the freak out in January. But the major concern also for NVIDIA that we have to mention is these export controls, any incoming restrictions coming from the Trump administration, if there's any retaliation on China's side, that could impact NVIDIA. So that's an overhang. And then it's the supply issues that with Blackwell, there's so much demand, but there's still some issues. There have been rumors of issues of the advanced packaging that goes onto those chips, and so perhaps that's delayed the increase in revenues to the following quarter. But it's still, demand's still there. That theory, that thesis, that story for NVIDIA hasn't.
February saw a strong 22% increase in Nvidia stock, and we saw it soar above the 250-day moving averages, reaching an intraday high of 143.44 before settling marginally at $0.34. Is more than just a resurgence. It's a statement. Investors aren't just waiting impatiently for Nvidia's upcoming earnings report. They're virtually glued to the screen. The switch from the current Hopper GPU to the much-anticipated Blackwell is something that no one can overlook. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Market, which has been a big part of what's driven many of the mega caps, certainly Nvidia now. What do you think is holding that story up as we look ahead to Nvidia earnings next week? I mean, the mega caps have kind of been passing the baton between them, even though there's been some broadening. It's not like those big guys have given up the ghost.
Well, but again, the bigger picture is every single day there's a new headline with regard to a new AI startup. And in the final analysis is if you think about the internet revolution, two things went on. As it became clear that it became more important in terms of people's everyday lives, you had this sort of multiplier effect to the use of it, to the business applications. And we're in the stage now where corporate America knows that they have to engage in AI because it is part of people's everyday life. And the DeepSeek news tells you that the demand is going to rise and that things are going to happen at an all-in cheaper price. And that is very...
There is a noticeable buzz, especially among technical analysts who highlight the important resistance and support levels between $130 and $140. Not to mention that Nvidia plans to reveal its developments in robotics and quantum technologies at the upcoming GTC conference in March, where the tech giant not only hopes to showcase innovations, but also solidify its position as the industry leader. This technical landscape serves as the battlefield where market confidence is both tested and strengthened. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
about what's going on post DeepSeek, whether there's going to be demand for their chips. But we did hear from all of the big majors, whether that be Amazon, Meta, Alphabet, any of them, looking at spending even more next time around this year for CapEx. Does that? How do you feel about the shares, given the pullback that we've seen in Nvidia shares as a result?
Sure, absolutely. You know, when DeepSeek came out, somebody compared it to the Sputnik moment. I think it has been kind of a Sputnik moment because the U.S. spending on defense and aerospace went up, 10, 20-fold in the decade following that Sputnik moment. So, since DeepSeek news came out, we have seen, I think, Becky, to your point, the U.S. hyperscalers raised their CapEx. What was supposed to be a 20% growth year is now over a 30% growth year, over $360 billion. We have seen Stargate being announced with $500 billion of spending over multiple years. And then last week, what I think probably went unnoticed is the intention of European customers to spend. The European Commission announced a 200 billion euro program. France announced a 109 billion euro program, all for investing in AI. So we think this is a long-term theme. When it comes to NVIDIA's earnings specifically, they are going through a product transition. There are China kind of restriction headwinds. So it's possible that the quarter they guide, might be a tad squishy, but we look forward. The stock is trading at the lower end of its valuation range. I think it is absolutely a leader in being able to benefit from a lot of this spending. So we would be buyers of NVIDIA. It's our top pick. But as I mentioned, that earnings are always a volatile time frame. But right after earnings, we think NVIDIA's GPU technology conference will help to put the...
Nvidia is in a strong position now that it has restored market confidence after navigating the highs and lows of recent months with incredible fortitude. The compelling forecasts predicting its growth are not just speculation. Rather, they are based on a strategic vision and strong product advancements. However, what do you think? Finally, give your opinions. If you want to see what firms like Nvidia have been up to lately, click the next video on your screen. I hope to see you there.